Good morning, everybody. Welcome to the Locke in Your Success Options Trading for Income Weekly Update for May 4th, 2015. Before we get going, we would like to remind you that the presentation is for educational purposes only. We are not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please note that the risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. And also, all trades covered in this presentation are hypothetical computer simulated trades unless otherwise noted, and our results are believed to be as accurately represented as possible. However, live results may vary. If you're watching this on YouTube, some other venue, come over to our website, check out our programs. We have the super simple spreads. We have the M3, the Bearish Butterfly, the Rock, the M21, and of course our one-on-one coaching programs. Also become part of our inner circle by joining our mailing list, get your free report, 7 Secrets to Becoming a Successful Trader, and sign up for this free weekly webinar. And stay tuned for our programs currently under development. We have Advanced Position Management Squared. That's going to be in 14 days, so that's going to excited about that. We will be taping that and have an online course available hopefully sometime in June. I'll get that done as quickly as possible. I know of a lot of people interested in that. Also, we have the Trading Triangle book coming out, as well as the online Trading Triangle course, and we have going to start getting into some directional stuff. And anything else you guys would like to see, just let me know. I'll see what we can do to put something together that works in that type of a thing. Moving on, let's quickly take a look at the markets, and we will see how we're doing. Last week, we were looking at two things. We were looking at the SPX. And I was basically saying if we had a breakout in the SPX that held, that would be very bullish for the markets, and we'd likely break out to new highs with everything. Well, at the same time, we were also looking at the NDX, and saying that if we had a failure on this breakout in the NDX, then we would get an aggressive down move in the markets. And it looks like we had the failed breakout on the SPX on Monday. We had the support failure on Thursday on the NDX, and we got a relatively large move down. So I think that was pretty much expected. I don't think there was anything too surprising there. Markets more or less came down to support levels. We are still bullish. I mean, this is still, even though we come back down to this pattern, we got to bounce back up to our resistance area, kind of at a decision point here. And I have somebody with no sound. I'm assuming I'm getting sound from most of you guys because I'd have more complaints. Okay, great. All right, well, we'll keep going. It must be something on John's side. Okay, great. So anyway, from here, if we look at where we pulled back to on the Dow, it's kind of like it's a trend line. We didn't even get down to trend line in the NASDAQ. We are down to trend line on the SPX, and we got a bounce. So nothing here indicating the market's going to break down or anything. We're just possibly pushing into a sideways range, and we're just kind of back in limbo again, which is actually good for us. If we can stay in limbo for a long time, we make a lot of money. So we'll see if that continues on. So from right here, with the Russell, more or less I'd be expecting the markets to come. Since the NASDAQ, when it pulled back, didn't come all the way to support, I wouldn't be surprised if we pull down a little bit more into 1210 or so. But, other than that, we're probably going to stay in this 1280 to 1210 range for a little while. All right, so moving forward and taking a look at our positions, we have our M3 trade for May. This is what the position looked like as of Monday. It's a fine looking position. There's nothing wrong with it. Everything is good. Obviously on Thursday, we had no adjustments till Thursday. I did let this go to the end of the day because we're not doing intraday adjustments or anything like that. This is what the trade looked like coming into Thursday night. We did our normal rollback, so we're here at 1220. We let this thing roll back to 1190 butterflies. We added 3 1190 1210 verticals, 7 1190 1220 verticals, put ourselves slightly positive delta, And actually the profit and loss actually did come back in this. So let me look at the reports on this for a second, see where we're at combined here. Yeah, down 1,500. So that should be the right profit and loss number. I think we must have had a bad number at 1,500. So anyway, we are down about $1,500 as of Thursday, and then Friday this came back a little bit more. And we're only down about 400 now. Yeah, we can share the complete Métis log here. So let's just take a look at this here. And when you watch the video, you can grab those numbers if you'd like. But yeah, we've been kicked around a little in May. Actually, the responses that I have, and I know my live trades were up significantly in May. I pulled May off for about 8% profit in live trades. The simulated trade here got kicked around more than the live trade did. I think I entered maybe a little bit slightly different day or something like that, but we were able to pull this out near our profit targets. I know a lot of clients were able to do that too. This is one of those months where we're getting a significant difference between our live trading and simulated trades, which actually doesn't happen a whole lot. Usually they're fairly close, but that's okay. Everything is fine with this position. It's really not an issue here. I do have somebody who's saying that they're still having a problem with OptionView calculating profits and losses. I have not heard of that from anybody else since the update. They've been fine. So I would contact OptionView. If anybody's having that problem, let me know, because if it's more than one person, then we're certainly going to want to talk to them about that. But as far as I know, nobody else has had this issue since it's been back, if they've been marking their T-log properly and all that other stuff. If you are, what they'll probably tell you to do is delete OptionView off your system and then reinstall it. And you'll want to know the procedure for doing that so you don't lose your data. So I'd call them and just have you, see what they say, but that's probably, that's okay. John's saying there's still a problem, but there is a one-click fix, so I'm not sure what that issue is. If you want to email it to me, John, let me know. I'll put it out there. Okay, so I haven't seen any problems with it, though, personally. Moving forward, let's take a look at what we have for the May rock trade. The May rock trade got kicked around pretty good this week, so let's see here. Let's go to Monday at 1,500. This is the position we were actually in as of the last update. Let me go to the rock trade. That would be helpful. So we were here. The trade is actually looking pretty nice. We are in 2/3, almost completely scaled into a rock trade here, having some pressure to the downside. So the thing with this type of a position is it's very sensitive to price movement. So we don't like to see 26-point moves in a day. That could be problematic. But anyway, here we are as of Monday. The thing with this trade here is we do not allow a whole lot of positive delta with this. We are very careful to the downside. And as soon as we go over 100 positive delta, we're kicking this thing into something that can handle a little bit more volatility. So as of Monday, we pulled off our upper butterflies. So we had some butterflies up here at, let's see, at 1310. We pulled those off to bring our delta down under 100. Could have been a little bit more aggressive here. Usually I'm not, so I wasn't. Here's what the position looks like as of Monday. So no problems with that. Going into Tuesday, we did nothing. Wednesday, we had a continued down move. So here we are Wednesday. We actually did hit delta numbers here, so we end up rolling these by 1530. It's not showing us at 1500, but we end up rolling these 1240s down at 1220 because we were pushing our 100 delta numbers towards the end of the day here. This brings us into a cat position, which is more protective as far as price movement than the regular rock position, and not anywhere near as like an M3, but a whole lot more protective than a regular rock position, which was good. It kicked us back. Then coming into the big down move on Thursday, we ended up, if we just go back a little bit during the day here, we ended up well over our maximum delta on cat trade. So what we ended up doing is kicking this back into what we call an M3R position, where we sold off half of our upper butterflies. We added a vertical in here, 1190, 1200 vertical, and we added a deep in the money call. This puts us in a position that's very similar to an M3 down here, but has a bit of a tent to the upside. This is called an M3R position within the rock trade. Good example this month because we've hit pretty much all the positions in the, not all of them, but a good number of the positions within the system. So this is what that looks like, an M3R. And as the market, if it continues to go down, we push more into an M3 type of trade. If the market goes back up, we'll eventually go back into a rock trade. I don't know if we'll have time for that here, but if the market is relatively stagnant, we're going to stay in this type of a position here. So this is that. Let me just show the T-log on this trade. So this trade, let's see, this started out as a regular rock position trade. I think we got kicked back into rock half rolled back. Then we got pushed back up into a regular rock trade again. Then we got pushed back to a cat trade, and then we got pushed back to an M3R. So this trade's been getting kicked around. Generally, when you enter as a rock position, the delta skews are telling you the market's not moving around a whole lot, but that hasn't been the case this particular time, so we've been getting some movement. We've been doing okay. We've been holding our own, been up as much as $3,000, but the large moves, if we're in a aggressive position here, do tend to knock the profits back off. Very interesting trade this month. I like it. That is the rock trade. So let's go to the May V Condor, which had its first adjustment on Thursday. So if we take a look at the V Condor for May, this is the position we are in as of Thursday morning. It's the same position we've been in since the start of the trade. Let's just back this out a little bit. We don't allow a whole lot of positive delta to the downside here. We only allow, on this position this size, we only allow a positive 50. That did not actually get hit until the end of the day on Thursday. So the end of the day on Thursday, we started running our maximum delta numbers here. So I just bought back some of these 1160 shorts here at, I believe it was 2 of them. So let me just scoot this forward. We bought back 2 of these 1170s. We had positive 50. It cut us down to plus 24 and puts us into this position here. So this position still looks perfectly fine. If the market doesn't crash, we'll make something this month, pretty much guaranteed. So it's looking good. And like I said, so far it's been very, very easy, very simple trade, even with the market shooting around like it's been moving around. And that is all we have for the May positions. So interesting week. What do we get? A 60-point down move off the top here, right? So down at 1280 to down around 1220. So a nice 60-point drop off. That's a pretty aggressive move to be in next to expiration. So it's been fun. All right, on our June positions. Luckily, if we're far from expiration, the moves like that usually don't bother you at all. T-log for the V Condor. Yeah, I think I had that up there, but I will certainly put that up. So we entered on the 20th. We made our of March, made our first adjustment on the 30th of April. That was a complex trade there, huh? Anyway, pretty simple. Let's move on to our June positions here. We got a June Bearish Butterfly, which had no adjustments. This doesn't have an adjustment point down to 1200. Here is our current position. If we, let's see, how many days to expiration are we in June here? Oh, we're still 50 days, so we have quite a bit of time here. No ways near exiting from expiration from a reduced profit target or anything. So this is up $3,200. Very nice trade so far. all we had is an entry. So not a whole lot to go over with that one. We have our June M3 trade, which did get kicked back a little bit. On Thursday. So let's go Thursday prior to adjustments on our M3 trade. Here's what we looked like on our June M3 trade. Remember, we were in the same strikes as the Bearish Butterfly, except we had this call on, which robbed us of all our profits on the down move. And obviously over 50 delta towards the end of the day. And obviously well past the short strikes. So definitely due for a rollback here. We just took this position, rolled it back all the way to 1190, which is a very large rollback. And this is what we look like after the adjustment. And coming into Friday, we are still sitting here down about $1,000. So not a big deal with that. And again, that position is looking pretty good. So the last thing we have is a June V Condor, which had no adjustments either. Again, this was simply entered as per plan and is sitting in a position that looks like this. So that is what we have for the positions. Not a lot of gains this month in some of them. I mean, the Bearish Butterfly for May was a reduced profit target, which was good. We're going to have some money coming into the May V Condor. That should be good. The Rock trade and M3 trade for May, we're around break even. And like I said, so far the June trades are doing well. So for questions I have, what do I do with V Condors when the moves are even more dramatic? Do I ever roll back? Do I ever roll the credit spreads out? We only roll the position to the upside. We never roll it when the market goes down. So we essentially start shaving off our gamma risk. We start shaving off our downside risk. If the market just continues down and continues to go down, we take the loss on the trade at the short strikes of our Condor, which usually is significantly less than max loss, but not all the time. And to the upside, sometimes we'll roll forward. On this kind of sessions, do I discuss how to manage the V in the IWM straddle? If we do an IWM, it's the exact same as if you use it if you do it in the Russell. So we're just going to open it up when we need to. But yeah, if you have, I don't get too detailed on the management of it. If we have to move it, or if I open it up, I will tell you why. So yeah, I'll tell you why I do everything here, within the adjustments. Oh yes, in the M3 in June, I did also move the long call. So if we take a look at the June M3, and we look at the T-log, I did move the long call from 1120 to 1060. So I forgot to mention that. I did that mainly just to get myself a little bit more positive delta, because I did the rollback and I had the choice. I could do verticals to make myself more positive delta, or I could roll the callback. I just decided to roll the callback. Realistically, I could have done either one. So, why did I roll the? So June M3. Why did I roll the June M3 to 1190 instead of 1200? At 1190, I had trouble controlling. At 1190, I had a little bit of trouble controlling my gamma trend to the upside. In other words, I was having a sag issue. There are ways I can go to 1200 and correct the sag issue, but it's gets us a little bit away from the basic butterfly structure, and we're just doing a basic M3 as to program here. So being at 1200 gave me a little bit too much sag in my T+0. In other words, I didn't like the result when the market reversed. So that being the case, I just went to 1190. I didn't enter the June M3. What would your thoughts be to plan an entry in the coming days? Yeah, so if you're watching the pricing of the position you want to enter, and it's a good, and the pricing's good for a particular day, then I'd go ahead and enter it. The volatility still being high and stuff, as long as you can get a good entry day, you might be able to go into the, particularly if the market's up today, you'll probably be able to go into the 1200 strikes, possibly even the 1210s, and you might start to actually have to put verticals in if the volatility drops. But yeah, I think a June M3 trade is perfectly fine here. No issues with that. Are the commissions you use in the T-log real? They seem a little high even for a small retail trader. The T-log, yeah, I use $1.50 for commissions because a lot of people are at $1.50. So yeah, we can get commissions as low as 75 cents, but I think $1.50 is a very realistic rate. I don't know anyone under $1.75, so we just keep them at $1.50 because that's what like I said, you really shouldn't be paying much more than that. I think it's a very realistic number for most people. And I'm back testing March 2014. There was a huge down move. Yeah, so that may have been a loss in the V Condor if on March 14. I don't remember. I'd have to go look. But yeah, we occasionally take losses in that trade. Very huge down move. We're not going to roll back. You know, if you're an advanced trader, if you're a guy who's doing an M21 trades and an advanced M3 trader, and you want to trade a V Condor and you want to make corrections for a down move, you can certainly do that. What I found through years of coaching and back trading and trading live with condors in general, usually if they get the trouble to the downside, you're better off to let them lose than you are to try and roll back and do all these fancy tricks to try and fix them, because usually you create worse losses or end up hurting yourself more than if you just moved on. Just say, hey, the month didn't go my way, and move on. So within the program, to the downside, that's not so much true to the upside, but to the downside, generally that's true more often than not. So we just kind of let the trade. We don't roll back. We don't fight it. We wait to see if the market comes back. If it comes back, great. If it doesn't, then we take our loss. And let's see here. Yeah, I wouldn't lose more than $5,000 on a V Condor, on a $50,000 V Condor. I would exit at that point if you get there. All right, you're welcome, Ray. Thanks for seeing this. You're welcome, very welcome. If I make adjustments, do I lower my profit target? Well, realistically, if we're still talking V Condor or making adjustments, the trade's going to make what it's going to make. Generally, a V Condor is going to make 3,000. On a good month, you can make as much as 10,000. We have to start buying back puts. You usually are not going to make as much money. So I'm looking at the V Condor now for May. I had to buy back some puts. If the market bounces and stays in the middle of my position, I'm probably going to get a couple grand profit out of that or so. If the market is very nice to me and we have just an explosive up move and we can make that straddle work for us to the upside, then we can possibly make a lot more than that. But this is just one of those. But yeah, occasionally you're going to make more, occasionally less. If a position remains open till expiration, how do assignment and exercise fee compare to paying the wide bid-ask spreads closing a position? You have to consider how much room you have in without a problem when you're expiring. Usually if you're expiring a V Condor, your options are no ways near in a problem. In other words, they're no ways near in trouble. So generally you don't have an issue there. If you're doing an M3 or some other trade where you're within a certain range, right, because the market, you have to think about what's the settlement value with the Russell going to be, because the settlement values are determined the following morning, and it's not the following morning opening price, it's the RLS that determines your settlement values, which is this chart here. You can go here, $ RLS on the Russell, and this gives us all our settling values for each day. And it can be pretty far from Thursday's close, so you have to make sure you have enough room. If you choose to expire it, And you know, and I expire a lot of options, so it's not a big deal. What they'll do, what some brokers do, is they don't charge you anything. They're cash settled, so you're not going to get the Russell index or anything like that. They're just going to cash out the options for whatever they're worth. And if something's in the money, some brokers don't charge you anything. Thinkorswim, if they're in the money, charges you $30 a strike. So if I have 100 options that expire in the money, it's cheaper for me to expire them and take that $30 exercise than it is to pay the commissions to get out of it, because commissions on 100 options is more than $30. So it's cheaper that way. If I have one option at 3 different strikes in the money, you can hit $30 a piece for them. You know, that's, in that case, it's worth trading out of them, because you're just kind of weighing how much you're costing or whatever. As far as the bid-ask spread, you're gonna get a reasonable price to get out of them anyway. So it's easy enough to get out of these things. So that's generally not an issue. I mean, if it's deep in the money and you don't have, well, if it's deep in the money, you have delta risk, right? If it's way out of the money, you don't get charged for it. You might as well just let it expire. But I guess hopefully that answers your question. Any benefit to using SPX for V condors? No, they're fine. You know, we can do them in the SPX as well. Sometimes you have to use slightly different ratios, stuff like that, if you switch indices. But yeah, the SPX is perfectly fine. Is there a benefit? No. I mean, Russell and the SPX, they move about the same dollar value. So, of course, SPX you get a little bit wider, but again, SPX you can get bigger extreme moves. So 6 and 1/2 dozen the other, as far as I'm concerned. All right, so that, I believe, is everything. I thank everybody for joining me this morning. I hope everybody has an awesome week trading, and we'll see you next week.